Hi everyone and welcome to the weekly update with me, Richard Perry. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've got a fairly sort of light market of economic data, but certainly I think the market will still be looking towards this Fed rate hike that we've got now pretty much nailed on for March FOMC, which is next week. We've had a succession of Fed speakers in the last week or so, sort of all alluding to the fact that the Fed was ready to make the next move, and Janet Yellen sort of confirmed as much pretty much on Friday in terms of saying that the Fed was on course for its next rate hike. If the data continue to sort of confirm that fact. Now, pretty much all we've got on the US data front this week that could probably sort of push the Fed off that course is non-farm payrolls on Friday. Now, we've had pretty consistent payrolls data in recent months, and Yellen's even said herself that anything sort of between even 75 to 125 of payrolls growth every month, it still suggests that the labour market is improving. So it's going to take a significant miss to the downside to really sort of push the Fed off that course. So the markets have priced in pretty much a March rate hike. Now we've seen 2-year Treasury yields. If you've got the chart here, that's pushed out to multi-year highs above 1.3%, and you've also seen the dollar that's started to strengthen as well. So there are idiosyncratic moves around these dollar strength moves, because you've got the euro, which is going through this French election at the moment, and again today we've had a bit of yen strength coming through after the North Korean missile tests drove a little bit of a safe haven flow, but generally speaking we are seeing dollar strength once again. Now let's see how that sort of affects the forex markets, because we've basically got the euro, which is sort of still trading around that sort of 106, 105 to 106 area, not really decisively breaking down. As I said again, you've seen a slight improvement in the prospects of a couple of French presidential candidates, Macron and Fillon, but also the prospect of possibly Alain Juppé as well joining the race. All three of those would be expected to beat Marine Le Pen in the second round runoff. Now, we've also got the fact that the cable chart has broken down. It's still in its range, yes, but it's broken down and it looks to be sort of testing towards the bottom of that range. That again suggests dollar strength. In terms of the yen, still remains range bound against the dollar, but it's just slightly started to strengthen a bit today. There is a pivot around 114, big figure, but certainly there is that general sort of area of range-bound trading on the dollar-yen chart. But if you look at the commodity currencies, the Kiwi dollar is quite strongly lower. That's coming on the double whammy really of dollar strength, but also the RBNZ, which was fairly dovish recently. But looking at the Aussie, that is outperforming the Kiwi. We've got the RBA tomorrow, so that'll be interesting to see how the market views that. It certainly has been outperforming and holding up well despite the US dollar strength recently. Now, looking at the equity markets, we've had a strong run high, and that sort of strong run high has been supported by the prospect of Donald Trump and his infrastructure program. Not really getting what they wanted in terms of the market move in his speech towards Congress in the week. Last week there wasn't a great deal of detail in the speech, but still the markets are holding up equities fairly strongly, and they're still sort of pointing towards continued upside, I think, in equity markets in the medium to long term. They are looking arguably expensive, but to be honest, that is coming through something to do with the fact that Trump and his corporate tax cuts could well be significantly supportive of further gains in markets. So we're seeing the equity market still sort of being bought into on corrections, and the DAX and the FTSE still similar sort of outlooks, really sort of coming back towards old breakouts and finding support and pushing higher again. The recent correction again should be able to find support around the breakout levels, and you've got around sort of 11,895 on the DAX, around 7,200 on the FTSE. S&P 500 continues to trend higher, really no real change there. In terms of your commodity markets, well, you've still got gold that is sort of being now affected by this rate hike expectation shift. Gold has broken the uptrend. It hasn't yet broken down into a bearish trend because that support around 1220 remains intact, but be very interesting to see how that one plays out this week. That is a key level, 12.20 I'm looking at on the charts. In terms of oil, remains very much range bound. Nothing really doing in terms of a change to that expectation. You've got the US oil inventories, which continue to build on a weekly basis. I think we've had 8 weeks in a row now of EIA oil inventories build on the crude side. But you've got OPEC compliance to the production cuts, which is again helping to support the downside. So I think it's fairly sort of range bound and no real changes there. We've got a big conference this week, which could well show that how committed OPEC is possibly towards further cuts in production. So watch out for that. Now, in terms of what we've got to look forward to this week, well, we have got the ECB on Thursday. That is going to be a big variable and big factor for the euro. You've had a lot of Eurozone data which has been positive recently. I think Mario Draghi is likely to be fairly sort of upbeat at this meeting. Whether he starts talking about tapering, or whether the Governing Council have started to discuss tapering remains to be seen. That would be the big factor for the euro that possibly could drive a euro rally. But at the moment, the markets are fairly sort of solid on the euro, and it'll be dependent on, I think, whether they start to taper on it this year. Now, in terms of the rest of the week, well, you've got a bit of trade data, you've got a bit of second reading of GDPs, but generally speaking, we're looking out towards the payrolls data on Friday. 190,000 expected, earnings growth of 0.3%, in unemployment just dropping slightly to 4.7%. All these factors would play into a pretty solid report that would fairly much nail on a March rate hike. So that's pretty much what we're looking out for this week, and I wish you good luck in your trading. I'll speak to you next time. Thank you.